Gary Black was interviewed a few days ago and he answered what would make him buy a lot more Tesla stock. Also, he explained how he values Tesla stock, what is a fair price to earnings ratio, and what kind of growth he expects from Tesla stock. So let's take a look.
What PE ratio do you think Tesla's should be at? And then compare that to Chipotle's PE ratio.
Yeah. Well, unfair comparison because Tesla's number one. But Tesla in my model is growing about 30% per year, so lower than the quote unquote 50% that the bulls tend to use because, as it gets bigger and bigger and bigger, you're already getting EV adoption up into the, 30-40% range once you get out to say 2025, 2026. So we use 30% as long-term growth. I use a rule of thumb about 1.5 times price earnings relative to growth. So I would say 45 times is probably a kind of a fair multiple on Tesla.
If you look at current PE ratio of Tesla, it is 54, and the forward PE ratio, which is basically the next 12 months, it stands at 48, which is roughly where Gary Black says it should be. However, that is the Wall Street consensus. Gary's numbers are a little bit higher than the consensus. Also, Gary does not really believe in FSD at all. He only considers it, he only models it as a driver assist feature. So if you believe in FSD, then Gary is going to be quite conservative with his numbers. He also assumes that Tesla will deliver roughly about 10 million vehicles in the year 2030.
And then you have to figure, okay, what is the earnings going to be this year? The street is down about 410. The street's knocked their earnings down about 25% year to date. We're at about 480. So if you said, let's just say 45 times 480, that's about two.
What Gary is doing is he takes the price to earnings ratio of 45, multiplies it by $4.80, which is the estimated earnings per share for 2023, and that's how he would get $216, which is basically where Tesla stock should be based on this calculation right now.
I don't do that, as you know. I try to go out more than 1 year. So I go out to 2030. We've got it earning close to $30 a share by 2030. I think by 2030, it's going to have a lower multiple because, again, by 2030, you're at 60% EV adoption. So if I look at 2030 growth rate going forward, I come up about 15%. Again, come up with some kind of number that you think where it will trade in 2030. I come up with about 30 times. That's $900. I discount it back, and I get a value, if you want to think about value, of a theoretical value of about 370, 380. So, that's kind of the way to think about valuation. You use PEs, which is what the rest of the world uses, or you can try to come up with a theoretical value and then discount it back, and you get a much higher number. But if you're talking to portfolio managers, nobody's going to talk theoretical value. They're going to talk PEs.
Which is just one reason why portfolio managers underperform the market. You want to look as far into the future as you possibly can if you are trying to make the most money. You do not just want to look 1 year back or 1 year forward. That is short-term mindset. So I do like how Gary Black looks up until 2030 to come up with his valuation. That is a much better approach. In 2030, Gary Black believes that Tesla will earn $30 per share and that it will grow at about 15% per year, no longer 30%. So the higher the growth rate of a company is, the higher the price to earnings ratio is going to be because you are paying for future earnings. So $30 per share and multiplied by a 30 PE ratio, you get $900 that Tesla stock should be worth in 2030. And then you have to discount it if you want to find out how much that $900 is going to be worth to you today. Discounting is the process of converting a value received in a future time period to an equivalent value received immediately. For example, a dollar received 50 years from now may be valued less than a dollar received today. Discounting measures this relative value. I'll give you a super simple example. Today, Tesla stock is worth this much. In 2030, if I thought that Tesla stock was worth $277 only, I would not put any money in Tesla stock because I can put my money into a bank account that will give me 5% yearly interest rate, roughly. And that's basically no risk. But when you put money in stocks, that is not basically zero risk. So the higher the risk is, the higher the discounting rate is. For Gary Black, if Tesla stock is worth $900 in 2030, today it's worth $370 to him based on his discount rate.
Right. So first of all, you can't have 100% of your portfolio be Tesla. You just can't. So
Sure.
we have it right now at about 9.5. It could be higher. What would make, Alexandra always says, well, what would make you be more willing to take it higher? I need to understand that the brand has not been impaired by all the noise. And I asked them to come up with proof, and Elon came up with a kind of a crazy answer. Saying, well, I have, all these followers and they all must like me. So that has nothing to do with the Tesla brand. But when I look at some of the market research out there, because there's a lot of free stuff out there, you can look at net promoter scores, you can look at intent to buy, and you can see that the brand has come down. But I do think a lot of that is short term. It's not permanent. And so with all the Twitter noise, with all of Elon's right wing tweets, with all the stuff that happened at Twitter where there was lots of layoffs, there was a lot of noise. I could see why the brand rankings came down. Now, I don't think that's permanent, and that's why we've never cut back on our position in Tesla. We just didn't, we went heavy up on January 6th when they cut prices in China. We said, that's enough. That's, that just seemed like something that had to happen. And so we took it up about 150 basis points. And then, we've been trimming it back because I still would like to see some answer as to, has the brand been affected by all this noise? And I don't think it has, but I don't know for 100%. So my conviction is high, but I'd really like to get some answers from the company instead of Elon saying, well, I have, all these followers, because to me, that has nothing to do with the brand.
Gary makes some points that we should all consider. First of all, he only has about 10% of his portfolio in Tesla stock. To me, that's a little bit low, but he is a portfolio manager. For myself personally, 100% of my stock portfolio is in Tesla. I do have real estate, I do have businesses, so in a way I am diversified. When my family asks me, Matt, how much money should I put into Tesla? I tell them, do not put any more than what you are willing to lose. One of the reasons why I tell them that is because the volatility that we experience as Tesla stock investors is absolutely out of this world. Because, Teslas will be going to Mars eventually. So when I tell them don't put any more money than what you are willing to lose, holding for them is not difficult. They're just like, oh, when it goes down, okay, whatever. If I lose it all, I was okay with it anyway. And then when it goes up, we're happy. And then I don't get calls every time Tesla stock drops 10% in one day, or even just 5%, just like it did on Friday. That's just a better life for me personally. I do agree with Gary that Elon saying, hey, look at my followers. I have more followers than ever, therefore there's definitely no brand damage. I agree that is not a great answer because I can look at, for example, Obama. He has more followers than Elon Musk. And yet half of the country hates Obama in the US. But we do have data that says, for example, this is YouGov, 45% of the people like Elon Musk. In Q4, in Q3, before Elon acquired Twitter, it was only 40%. And for Tesla as a brand specifically, it only decreased by 1%, which is not statistically significant because it was lower than that. A year ago, it was only 45%. So if we compare data from a year ago, it's actually 3% higher. But the main reason why I am not worried about Tesla's brand and Elon's brand is because Elon changes course when he sees, oh, what I'm doing is not making sense. It's not helping me. So how about let's just not do that? And now we don't see any more tweets from Elon saying, my pronouns are prosecute so-and-so. He still tweets some somewhat, perhaps slightly offensive tweets, but nowhere near as controversial as before.
Like if we had all Tesla in the fourth quarter, it was down 55%. And it wasn't because of the economy. It's because worries about China. It was Twitter. It was worried about the U.S. and the, the IRA credit. So I'm just a big advocate of having a concentrated portfolio that gives you exposure to a lot of things, just in case you have, something like Tesla down 55% in the fourth quarter.
This is Gary's fund, the Future Fund ETF, and it is down 32.5% from its inception. It was started on August 27th, and to be fair, it is down not because Gary Black is a bad manager. I think he is great. It is down because everything is down. If you look at any growth stocks, they are all down basically. You look at Kathy Wood's fund, you don't want to look at that fund. In the same time period, it is down 67%, almost 68%. During the same time period, Tesla stock was up as much as 56%, and now it is down 17%. Compared to future funds, 32.5%. Again, that is not because Gary Black is a bad fund manager. I think he's actually great. That is because there are so few great stocks. And Tesla stock is, in my personal deep conviction, the best growth stock right now that you can have, risk adjusted. And just to be clear, I am not saying that there aren't other great investments. I have real estate, and that real estate has done well, nowhere near as well as Tesla stock though. But right now, I am very happy with the potential returns of Tesla stock until 2030. And I'm just busy enough watching Tesla stock daily. I just want to make sure that there's nothing crazy bad happening. I am very happy about Tesla's fundamentals, so that's what I'm doing. I'm watching Tesla's fundamentals. And to me, Tesla is once in a generation kind of opportunity. When I eventually sell Tesla stock, let's say 10 years from now, I will probably put most of it, if not all of it, into S&P 500. If you are new here, yes, I am actually a pretty boring, rather conservative investor, although I may not look like it if you just watched just one video of mine and thought, oh, I'm just all about putting everything into Tesla stock forever. That's not really me. I'm putting my money into it because I think it is actually a safe investment long term if I hold it for 10 years. The returns, I believe, are going to be very nice. If you are a long-time subscriber, I know you already know that, but we have a lot of new people watching. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.